not sure whether that will, impart a lot of confidence to the stock market if the finance minister goes ahead and says, I don't know. But I completely appreciate that that is the reality. Nobody knows what's likely to happen. But Abhi, come in on that. I think all of us are sounding very cautious. So let me just be a devil's advocate here. They're talking about that there are many upsides to domestic investment, output growth and disinflation. Yes, there are those uncertainties, but India has been a largely domestic economy, and that's the point I'm reiterating right now. That do you think the line that is coming in from the economic survey, where they're talking about the focus should be on MSMEs, focus should be on capital, creation and growth, that is something that the focus of the budget tomorrow is going to be most likely on?
Yes, I mean, I think that has been a sort of a constant, almost structural focus of the budget in nurturing the MSME. Often, I mean, I think there are costs to, rewarding smallness because you tend to sort of create, uh, you know, firms that don't have enough scale. But I personally think that there are potentially some upsides. And again, going back to Swami's point, that the Trump administration is not necessarily negative. As I said, that it's very uncertain at this stage, so don't expect any definitive plans or programs from the private sector, etc. And you have to hunker down. But there is a potential upside, as I said in my opening comments, that if there is a significant realignment away from China, there will be, among others, India as a major beneficiary. I personally think that instead of thinking of any kind of counter-cyclical measures on the consumption side as essentially salts to appease, I think they should be seen as legitimate macroeconomic measures. And I think at this stage, perhaps a certain segment of the middle class and perhaps some of the lower rungs of the income ladder need a leg up. I'm not saying that we need to go gangbusters on the on fiscal expansion. I think we can still do it with some amount of capital expenditure switches. I think we've done quite a bit of capital spending in terms of government expenditure. Maybe we can pull back a little on that. And so things can be done without necessarily, being, fiscally profligate. And I would see some amount of consumption support at this stage, which presents the possibility of an upside as a legitimate, macroeconomic short-term measure. Uh, I, and I'm not suggesting that we completely forget about the public debt, but I think we need to kind of we can't have, given the constraint of the public debt, we can't have our engines firing equally on all cylinders. So we'll have to choose a cylinder, and I would at this time choose the consumption cylinder. Exports are uncertain, but given the global environment, we've done enough of public capex. Let's see what the private sector has to do. I think consumption should be a priority this time.
If you like this video, then like, share and subscribe to ET Now.